President and CEO of the Atlanta Federal Reserve Bank. Raphael Bostic, undergrad from Harvard, and then, or BA from Harvard, and then PhD in economics from Stanford. So kind of knows what he's talking about when it comes to the economy. And now, obviously, at the head position here for the Atlanta Federal Reserve Bank, right in Midtown, since 2017. Before we went to break, Raphael, we talked about this inverted yield curve concept that we've covered a bunch here on the show. So our listeners are familiar with, sometimes we'll refer to it as the upside down yield curve, or it's backwards, it's not the way it's supposed to be. And part of that obviously has to do, or we think, this is what I'd like your thoughts on, is that rates are low here, but they're negative, if we can believe that, around the world. Literally, people are paying to put money in a bank as opposed to getting interest like you're supposed to. Does the yield curve inversion here now, does that worry you, or does that worry the Fed? And is it a sign of future recession?
So that's a very difficult question. What I would say is this. A lot of people believe that when the yield curve inverts, we're going to have a recession. And because of that, I think we have to take that reality seriously. Part of what's going on today, I think, is we have a bunch of global dynamics that are really changing the signal we should get from the yield curve, and have really caused me to try to think about how do we talk about this. Because we talked earlier about capital inflows, when we're the only country really that has positive returns on investment. You're going to get a lot of extra investment here, which is going to drive those yields down. Yeah. And it's going to drive it through the entire distribution.
And again, just as a quick reminder, why money comes in, buys treasury bonds, yields go down, prices up, yields
prices go up, so the yields go down. And so we know that there is a fair amount of other stuff that's going on that is affecting the shape of this curve that is really independent of risk. One of the things I've been asking, and the yield curve is a symptom, but it is not necessarily definitive. Right? So when I see yield curves start to get flatter, I redouble my efforts to try to identify where risks are. Why are people thinking that the economy is not going to be doing as well 6 months or 12 months from now? Is it something in the business sector? Is it something around consumers? And usually you can find it. When I talk to businesses today, and I've been talking to them for 2 years now, they're pretty okay with things. They're not seeing that the economy, their customers are weakening, and they really do feel that they can sustain the level of production and profitability that they've had for quite some time.
Well, this is another such an important piece of the equation, is that you're set up to monitor business activity basically in the Southeast. So you go out there, you and the Federal Reserve of Atlanta, you go talk to businesses, CEOs.
So I fly around a lot to go to every corner of the district, and so I go obviously to the big places. So I'm going to go to New Orleans or Jacksonville or Orlando or wherever. But I also try to go to small places. So Meridian, Mississippi, Muscle Shoals, Alabama, Johnson City, Tennessee, Albany, Georgia, just because that's a different slice of the 6th District, and it's important that I understand all of it. And it's been very good, and surprisingly, maybe to some, the story has been pretty consistent. Business leaders feel like they're okay.
As in good, consistently good.
Consistently good. Now, one of my board members in Jacksonville, he has 50% of his business in China. That's going to be a problem. But we know that. That's a very, very isolated and specific reason. Right. But most businesses in the Southeast don't have that kind of exposure. And so they're able, as far as I can tell right now, they will be able to continue along their trajectory and continue to show robust growth.
Is the Fed's next rate move to keep lowering rates or raise rates or just stay the same?
So that is a very good question. I will find out when you do as well. Here's what I would say. I try as much as possible, like our meeting's in a couple weeks still, I try to wait until just before the meeting until I have as much information as I can to really feel like I have a read on where the economy is. There's still a couple things that are going to come out. I think we got a jobs report coming out in a little bit, and some other. I want to see those because they will give me a clue as to whether the economy is slowing down more than I expected, or whether it's continuing in a robust way. And depending on the answer to that question, that'll give me a viewpoint on whether I think we should hold or move in some direction.
And there's always a lot of data there's economic data almost every day that you basically take that data all the way up to the meeting to be able to make a decision. Speaking of China, speaking of trade, again, hot topic on Money Matters, and then that of course involves the president. How much pressure does Jerome Powell or the Fed in general or you, how much pressure do you feel from the president? And at some point does the Fed cave to the president and say, okay, I get it? Or does the Fed say, we're totally independent? I mean, how does that play out?
Well, I can tell you how it plays out for me, which is I don't read tweets. I don't do those things. I hear about them sort of in the news with everybody else. I really just try to keep my head down. Like, I have a pretty straightforward job. Is understand where the economy is, have some sense of its trajectory, and figure out where to go forward, and then try to offer my view on what that means for the appropriate policy path.
So you don't feel pressure from that?
I don't, and I would tell you, if you watch CNBC or any of these other stations, they're all doing the same thing. They're telling me what they think I should do.
Right.
And so I just it's just another one in the pile.
Right.
Like,
so you guys have pressure. You've always had some pressure because you'll get in a given day on a financial news channel, you'll have 10 big bond managers that say the Fed should be lowering rates, or Jim Cramer jumping up and down. The Fed is gone crazy, or what did Cramer say? They've lost their mind. And so you're used to this pressure. I guess call it pseudo pressure. I think you've learned to ignore it.
It's part of the job.
Got it.
And
Okay.
people are going to have these opinions. They're going to be talking about it all the time. And we've got to take on board the folks that we work closely with, who kind of have all the information we do and trust that.
This is breaking news is that the Fed is used to this pressure anyway. So tweets are just another they're just another log on the fire. You guys are used to it.
Well, that's true. I think it heightens the importance of us talking about and explaining why we're making the decisions that we're making, and that we're not doing it for short-term issues, but we're really interested in the longer-term trajectory and the signals that we're getting in that context.
US-China trade. This has been more than a year and a half now. You mentioned some of your constituents in the Southeast that are tied to China. We have yet to see anything heavily material. Actually, I'm going to ask you that. Have you, and when it comes to this war, this trade war, but the second level of that is there's the economics of it, and then there's the psychology of the uncertainty that it creates. Have you started to see this impact negatively the Southeast region?
Sure. So on both fronts, I would say, from a psychology perspective, business leaders don't know what the rules are going to be 6 months from now. I mean, we talked earlier about how to make an investment decision, you have to have confidence that you know what the world's going to be like 2 years from now. If they don't know 6 months from now, how do they know 2 years from now? So many of the businesses that I've been talking to have told me, we are putting on hold any interesting investments.
Anything interesting
anything
significant,
that could potentially increase productivity and get us on a different trajectory, because I don't know if it's going to pay for itself, right? And so that's one thing. So we're seeing a lot of basically pulling back and moving to the sidelines for that sort of investment. The second thing I would say is that the administration was pretty strategic in which things they tariffed first. And this last round that happened just in the end of August, that's the first set of tariffs that has really focused on finished goods that will show up in stores that consumers will face. And so this will be the first time that many consumers directly feel the tariff.
So the fall, we're going to start to see, or the consumer may start to feel the tariffs a lot more than they did over the first half of the year.
They largely have not to date. I mean, most businesses, when this started, said 10%, if on a short run thing, I can just eat that. I don't need to pass that on because that's not going to be the lay of the land. Now, more than a year, 2 years, 3 years in, it's like, well, do I keep eating this? And now I've got to think my supply chain costs have gone up. Like, it starts to lead to different sort of decision-making approach when it looks longer term and then when it's on a broader set of goods.
So what we're also getting then is some pent-up investment opportunity too. So if the trade war gets resolved, if there is some, and it gets resolved, I can't see an outcome where it doesn't get resolved. I don't know if it's a good outcome or not. We either maybe still continue to have less reliance on China, which is a hard thing to do, or we get some wonderful free market trade deal, or maybe somewhere in the middle. But if we do get a resolution, then does it release a bunch of pent-up investment demand?
So I don't know why you're so convinced there's going to be a resolution.
Okay.
I have gotten out of the business of predicting the future and really taking it as it comes. We talk about China. We should not forget that the new NAFTA has not been ratified.
Right.
We should not forget that there are a bunch of tariffs on the table for Europe in the auto space that some are saying are more likely to happen than not. Right. So the entire trade area is quite unsettled. And it's something I've gotten out of the prediction space.
Okay.
Right?
Yeah.
I'm just gonna let things happen.
Take it as it is. Yeah.
There've been in the last a lot of this administration, a lot of ideas have been floated, a lot of things have been put out that have not come to pass. And so my view is really just to let things happen and pay attention to the things that actually do, and then figure out where to go from there.
Which makes sense, and you're saying that until the trade is buttoned up, which is a long way from being buttoned up, because it's not just China, to your point, it is also Europe. It's also NAFTA isn't fully baked yet. So there is a lot more than just saying, hey, we're gonna choose to get along. It's a bigger economic question that you guys have to consider until there is a resolution, and right now there's just not. All right, we're gonna run to quick news.